Ladies and gentlemen, there we go. Ladies and gentlemen, I apologize for that. To be honest, one of the two times this year, I think we've had a subtle issue with GoToWebinar, GoToMeeting actually loading correctly for us. So, welcome to our final open discussion of 2019, December 27th, Friday, our last Friday discussion where we can put 19 or 2019 at the end of it. We don't know what 2020 has in store for us, but it's going to be exciting to see what happens. It's going to be exciting to hear all of your questions going into the new year and beyond, to see what we have as far as strategies goes, other concepts go, and what we can do to learn from each other to continue to beat the market no matter what it throws at us in 2020. But talking about 2019, of course, in retrospect, what a year it has been. We've seen a great push in the broad market over the last 2.5, 3 months, really, with some easing today on some of the securities and some of the broad market indicators. But it has been a great year, and we thank you sincerely for being a great part of it. During this year, we've posted and hosted 106 new options education videos for you and for ourselves. Over 92,195 views on all PowerOptions videos just across YouTube, not even counting what is shown on the PowerOptions archives, which is actually a fairly sizable count as well. Just for YouTube alone, almost 20,000 hours of viewing options educational material. That's part of the community that you are a part of, and you that come to here to join us on our Friday sessions have helped us grow and have helped educate as well. The subscriptions at PowerOptions increased over the year as always. Sales, of course, of different products increased as well, and we increased the membership of the YouTube community and PowerOptions by 907 new options members. That, of course, came with 901 likes on the 106 videos, with 59 questions or comments that came in over the course of the year. So we put our efforts in to put the educational material up, but a lot of that educational material is guided by you that join us here on our free webinars, guiding the conversation, bringing us your questions, helping us with the answers, and helping other investors with your thoughts and comments as well. So thank you for being a great part of that community in 2019. Now, naturally, 106 videos over a 52-week period, that's a lot of information that we covered. But here are some of my favorites. June 21st, 2019. That was the halfway there mark. Halfway there, across the point of the year of trading, officially just about 6 months in. And on June 21st, there were only 6 standard expirations remaining. So it's always great to do these presentations. We also discuss concepts on double diagonals, the market sentiment tool on PowerOptions, and some brief discussion on Iron Condor setup and Iron Condor strategy and structure as well. But I like those occasional checkpoints, first quarter in, halfway mark, third quarter in, because we get to review the strategies you're using, and we get sort of a checkpoint of our performance to date. And on June 21st, of the attendees that were in the audience, we had 11% doing covered calls and naked puts. 56% were doing credit spreads and debit spreads. No one really said that buying calls, buying puts, and doing straddles or strangles were the main portion of their portfolio. We had 22% doing calendar spreads and horizontal, same strike calendars, and 11% were doing protective option strategies. At that point on June 21st, of the attendees that were there, no one said that they were exceeding their goals at that time. 22% said they were on par with their trading goals. 11% were profitable, but behind the targets. 33%, a full third, were at break even, a little bit ahead, a little bit below, weren't really getting ahead to where they wanted to be. And 33% so far were losing money in 2019. We had a couple little hiccups at the beginning of the year. We had that great run after the bottom of December 26, 2018, running up to, I think, about mid-March, where it's really at the end of February, and then it started to taper off there at mid-March. And we did see some hiccups there in May, I believe, and in June, just prior to this. So it was a really good checkpoint at that time. Now, of course, different attendees, but we're all still options traders. So curious to know now, at the end of 2019, what types of options strategies would you say made up the main portion of your portfolio over the entire year, or even if you just want to answer for the last 6 months, if your trading plan changed at that time? So we're just curious here. We did our checkpoint here at June 21st. We have those slides up, but we're curious to see where we stand right now at the end of the year as we eclipse the last 6 months of 2019. Well, there we go. Okay. About half of the audience has voted right now, so we're going to leave this poll open for another 10, 15 seconds or so, maybe 20 seconds. Let some more of those votes come in. We'll see where we stand. The other day I was hosting a webinar too, and it did appear that in that webinar about 30%, 28% I believe of the audience was trading covered calls. I always forget my notes. I always put them somewhere else. I believe it was, maybe it was higher. It was 45% I think were doing covered calls at that time. When we took the poll a couple weeks ago, or the other week. I don't have it listed here in my notes. Must be in that other piece of paper. But that's okay. All right, well, I've left the poll open long enough. Let's go ahead and close the poll, and we'll share the results there. So I've got 11% buying calls and buying puts. 0% on June 21st. It's interesting. No one in attendance today said they were doing covered calls and naked puts. It was 11% 6 months ago. 56% said they're doing insured positions, married puts and collars. That's up from 11% in June 19th. 22% during vertical spreads. Essentially, the vertical spreads and the insured positions flip-flop from June until today. Well, based on those who are attendance, we know it's not the same people, of course. But on average, 11% doing calendar spreads, close to the 22%. I know it's double, 22% in June to 11% today, but it's still a reasonable portion of the attendance. Am I sharing that with everyone? Oh, yeah, there we go. I'm sorry. It wasn't sharing properly. I apologize. So let's just leave that up there. 11% buying calls. No one in attendance today said they were doing covered calls or naked puts. Mark says not listed ratio spreads and long butterflies. And I have been usually including ratio spreads with the calendars. I don't normally include long butterflies in this question, although, Mark, you would have answered it in that fashion. Sometimes I'll have condors and iron butterflies in there, but I don't put the long butterflies in there because on average what we found is that about 1% or less are typically doing the long butterflies when we take the poll or we poll the PowerOptions subscribers. It's 1%, 2% or less that say they're doing the all call, all put, or long butterfly. So we normally don't include it in that case. But of course the argument can be made. 0 people said that covered calls and naked puts are the main portion of their portfolio, so we shouldn't show that either. But, all right, while we're here, let's just wrap that up. So we have a sort of different dynamic where in June, credit spreads and debit spreads were 56% of the audience, and today about 56% of the audience is doing protected positions, and only 11% or so were doing the credit spreads, and 11% were doing the calendars as well. So how are we doing in 2019? How did we do? Let's say wrap it up. I know we've got 2 days left or so, but have you exceeded your trading goals this trading year? Are you on par with your trading targets and the goals that you set for yourself? Are you profitable but haven't met your targets that you set at the beginning of the year? Are you about at break even, or did you lose money in 2019? Oh yeah, and Mark goes on to say, I do more than one kind of position. Right. I wanted to know what made up the most of your portfolio at any given time. Myself, Mark, about 50% of my trading account, my options allocation goes to married put. So I would answer the protective strategies in this one. But I still do 15% of my portfolio with credit spreads. And I probably trade more credit spreads over the course of the year than I do married puts or protected positions. But the bulk of my portfolio is allocated to the married puts. And that's kind of what I wanted. Where's the bulk of your portfolio allocated to? But as you mentioned, you didn't have the answer that you needed there in that case. Now, this isn't as good as I was hoping. A little bit more than half the audience answered, so I'm going to leave it open for another minute or so, 30 seconds or so, just to see where we are, and it's still not getting where I want it to be. That's okay. I mean, I've got solutions for this, but it's not what I wanted to see. All right. Well, the poll's been open for about a minute 45. Let me go ahead and close that down, ladies and gentlemen, and let me share it with the rest of you, with everyone in the audience. No one said that they exceeded their goals. I'm sorry to see that. Last week we were talking with Sam. He told us he wasn't going to be here. He more than exceeded his goals, and I think a lot of it was in the last 4 months or so with the last market run-up that we saw from about October to mid-December. No one said that they're on par with their goals. I kind of am. I'm a little bit behind. So I'm gonna go with the 70% of you. I am profitable, but just a little shy of my targets. So some of my married puts, my radioactive trades didn't work out as well as I wanted, and I tried to keep managing them to get that in the profit, and they're going to end the year. I haven't closed them yet. They're still open, so they're not realized. I'm going to keep trading them. I'm going to extend some of those positions because I haven't hit my targets on those trades yet. So I might put myself there. My put credit spreads did extremely well. Some of my calendars did well, but in any case, I'm going with the 70% of you. I'm profitable, but not quite at my targets. Want a little bit more out of that radioactive portfolio this year, and I didn't get it. I stayed in 2 positions too long, and I should have just gotten rid of them and opened more trades. 20% of you are at break even. All right, so it's not a complete wash, but we want to be doing better. And 10% of you lost money in 2019. I don't like to see that, but there are ways that, of course, we can go ahead and control that. We can help you with that going into 2020. All right, so, and one of the first things that we'll start off here, well, we'll start with this one. So that's why I like that halfway point. It gave us a good checkpoint. Again, let's just go back. I'm sorry, let's go back one. And there we go. So we saw there that people at the halfway point were doing a little bit better. 22% were on par with their trading goals. Then we had that breakdown. Now we're at 70, 20, and 10 that are profitable, but behind targets, break even, or losing money. Okay, so we're going to have to do something about that. One of my next favorite ones, there were actually 2 of these. I couldn't locate the second one. But we had something that I called the $1 million options investing question. And there were a couple of them this year that I think I called that, but this was the first one. And it was from July 5th, 2019, and I believe it was Lance's question. And his actual question was, I am looking to build my account by compounding gains. I want to close when I hit my 10% target. Hey, don't we all? But only risking 5%. Is the married put strategy, the radioactive trade, ideal for quickly rotating my gains, assuming only a 2 to 4 week hold time, or is there another strategy? As much as I advocate radioactive trading and the benefits of that, many of you know that, well, some of you might know that I answered this question, and I believe I told Lance that the married put strategy wasn't ideal for this. The married put strategy is ideal for setting up a position where you can't lose more than 5%. You leave the upside open. You have the potential to make 7, 10, 15%, depending on the performance and your use of the income methods in the blueprint. But to assume a 10% target in a 2 to 4 week hold time, when you're holding a put option that has a time value cost of 5, 6, 7%, you're talking about close to a 20, 25% gain in the underlying security in that 2 to 4 week hold time. And to be honest, if anyone out there can consistently find stocks that are gaining 20 to 25% in a 2 to 3 to 4 week hold time, you're doing exceptionally well. You probably don't need my help in trading. But what I liked about this question is it really gets to the crux of options investing. If you break it down into the simplest terms, can I control risk and make my target return? And my opinion is yes. But we have to be realistic. And we shouldn't expect to see that in a 2 to 4 week period consistently. If it was that easy to see stocks that move 10, 15, or 20 to 25% with a 5 or 6% hedge in place to protect against the downside, a lot more people would be trading in the market, and a lot more people would be successful trading in the market. But the answer to this question originally was no, but it's also yes. Because if you extend the hold time, if my goal for target return over the course of the year is 10, 12, 15%, maybe even higher, maybe 20%, I feel that's achievable with the married put technique. But not rotating 10% gains every 2 to 4 weeks because you need the stock to be trading 15 to 20% in this 2 to 4 week periods. But that was one of my favorite questions because it breaks it down into the newest option. You could break it down, into what the newest options investor might ask. Can I control risk, avoid losses, and make my target return? And I feel that the answer is yes with the proper structure. But we have to be realistic about the time frame. For those of you, the 10% that said you lost money in 2019 and the 20% that said you were below break even, didn't lose that much, but you're a little bit below break even there. One of my other favorite ones is one we always start off with, January 3rd, January 4th, January 5th, depending on how the schedule falls. And the webinar is called Your Trading Goals for This Year. And on January 4th, 2019, it was no different. We hosted a webinar for Your Trading Goals for 2019. This was sort of a radioactive trading blueprint owners members only webinar, but I actually posted the archive to share with everyone. So it was available as an archive to watch for everybody, whether you were a radioactive trader, you own the blueprint, you're a Fusion subscriber or not. You're just an investor, you're not even on a trial with PowerOptions. The reason I like this one so much is because I like to go back to this one, review the ideas and the concepts that we discussed at the beginning of the year, then go back and look at my full trading year and said if I had done more to follow the discussion, the ideas for what my trading goals for 2019 should be and how I should achieve them, what I could do to achieve them, had I followed those more, would my trading have improved? And that's why I like going back to this one. And of course, you can do that too. You can go to YouTube, look up PowerOptions, and then just search on the PowerOptions channel for your trading goals for 2019. You'll be able to use this as a reference point to go back and maybe see what ideas you could have applied for 2019 that would have improved your trading. And then that will help you decide what you need to do to improve your trading for 2020 as well. All right, well, another one of my favorite ones was a really good series. A lot of talk, of course, now of the next installment or the next trilogy of the big popular trilogy, which is now a part of Disney, of course, wrapped up their 3. We had a good series starting at the beginning of the year, January 9th, 21st, and 24th. I was actually challenged on a Friday webinar such as this at the end of December, I believe. I don't think it was the first one in January. I think it was the end of December, where an attendee asked me, could you just show me a video that's the basics of the credit spreads without all the discussion of stock criteria, this, that, and the other? So I realized that some of my recent webinars, some of my credit spread webinars might be too in-depth for someone who's brand new and interested in getting a credit spreads. So we launched Credit Spreads, the Basics. In my opinion, a really crisp, clean, basic view of credit spreads that would appeal to any investor who's coming off of covered calls or perhaps even just trading stock and has heard about credit spreads and wants to start trading them. But of course, we wanted to expand beyond that. So a couple weeks later, we did Credit Spreads Beyond the Basics Part 1, where we talked about the proper structure, the proper criteria, both for the underlying stock and for the spread itself, that we've seen through vast amounts of historical testing lead to good profits long term. And then Credit Spreads Beyond the Basics Part 2 was also fun when we had a comment from a options investor who watched the Part 1 on YouTube and said, well, your ideas are kind of suspect because you're just looking at this sort of time frame and time shot of what your idea you thought would be successful and you kind of ran with it, but you should have compared it to this, compared it to this, and compared it to this. So we started off Part 2 with doing exactly what that customer asked and showed them that, yes, maybe we can't show every little nuance of what if I had only entered credit spreads on a Tuesday after the 7th date of the month when the Bollinger Bands were at a peak, the stock was above the SMA 20 or below the SMA 20 for bearish, and there was one holiday coming up 4 days away where the market wasn't closed, but it was a federal holiday, right? I can't check all of that, but we had a lot of fun with those 3, and it's a great starting point, I think, for any investor to go through the basics and then Credit Spreads Beyond the Basics Part 1 as well. Okay. All right. Now, another one I was very fond of, I forgot to jot down who asked this question, but on November 19th, kind of recently, one of our attendees came in and fired off 4 questions in a row, all related to iron condors. And do you attempt to select strikes that will result in approximately delta neutral for the iron condor? My answer was no. But when we talked about it a little bit, using the criteria that I set for good probability, range out of the money, the return that I want, the time frame I want, we came to the conclusion that I might actually be doing that without actually doing that. What is a good way to decide the total width of the iron condor, largest strike versus smallest strike? Well, we discussed our historical testing we did with credit spreads, which relates exactly to iron condors, which is just a combination of two credit spreads. Do you consider implied volatilities when deciding the expiration dates? The short answer was no. I go for a target through testing that I've seen be successful with the credit spreads, more successful than others, and I stick with that if I'm doing an iron condor. And of course the question, how do you decide when it's better not to use the iron condor position? So I think it was a half-hour discussion, maybe 25 minutes, but this covered a great number of concepts of almost starting the iron condor from the beginning to some of the more advanced concepts in that 25 minutes, guided by the specific 4 questions. I thought it was a really rich discussion, and we covered a lot of information both for investors that are brand new again to iron condors, but also those who have been trading iron condors for a fair amount of time. And that was on November 19th, 4 questions about iron condors. Another good one I enjoyed, to leg in or not to leg in. Middle of the year, August 26, 2019. The question came in, some option traders say that they plan to buy a long call today and later sell a call against the position. What is the best way to analyze whether to create an immediate calendar spread or credit or debit spread, or leg into a spread later? And this was a good discussion about if you have a trading plan in mind. For example, you like the risk reward of credit spreads. You realize that if you're successful the 75, 80, 85% of the time, you'll hit your target return. Why try to time it and confuse it? If that's the strategy you want and the targets you want, go with it right away. Don't worry about legging into it. Now, if you think you're in a strong bull market, maybe you're trading bull call debit spreads or poor man's covered calls. We had a great discussion on poor man's covered calls in just the last few weeks and even a couple of months ago. Those are some good ones too. But if that's your strategy, to do the poor man's covered call, and you think we're in a bull market, maybe that's the time to buy the call, wait, sort of mimicking stock ownership, and then sell the call when you think it's hit a peak and you think the stock might hesitate or pull back, but is still a good bullish stock. So it's a pretty good discussion. Now, one more I didn't get to jot down right before the webinar started. There's a webinar a while back. I want to say it was in September. Maybe it was a little bit before that, but it was 6 option discussions in 30 minutes. So we essentially went through 6 really good topics, 6 rapid-fire questions that came in. And we spent only about 5 or 6 minutes on each one. So we covered 6 topics in 30 minutes, and it was a really quick-fire, strong presentation.